as the price of gold is falling, the dollar is actually rising. Now, what exactly is going on between the relationship with the two? We're here on the CME floor in New York, and we're going to talk to a few experts to see exactly what's going on. There's been a lot of developments, especially since the last Fed meeting, which was held last week, and them kind of hinting at they might scale back on QE. How is this now affecting the dollar's relationship with gold?
Well, Jess, we've had a couple of steps forward and back. Just recently today, Lacker said that perhaps the Fed would be considering QE taper in the September meeting. So what happens there is that the bond markets are directly affected. That affects interest rates, and that is going to affect the price of the dollar. Dollar now is rallying. We've seen the dollar rally and give back some ground when Bernanke spoke, and everybody thought tapering was imminent. And then Lacker and Lockhart and others came out and tried to calm the marketplace, saying, well, we're not doing that so quickly. And then today, of course, we heard the definitive statement after the speech where Lacker was saying that perhaps September is a time where they would consider this scale back or this taper. So there's an expectation that that QE will stop at some time in the fall. Or not stop, I shouldn't say stop, it should taper.
So how important exactly is the strengthening dollar opposed to the price of gold just plummeting right now?
Well, Jess, gold has traditionally been known as a hedge for inflation. We are in a deflationary environment, so it's not uncommon, or it's not a stretch that we see gold falling off its highs of roughly 1934 last year, in September of last year, and now down to a level of 1224, 1227 perhaps at this time of the day, just getting to the end of the trading day. That happens to be a 50% retracement of the move from 05 around the let's say the 410 level to last year's high September of 1930, let's say in that area, right? We hit exactly down at the 50% Fibonacci retracement of that and bounced off that today. That came in somewhere around 1180 today. So the idea is that we're in a deflationary environment, and if investors are buying gold as a hedge against inflation, then when we are in a deflationary environment and expectations for inflation are low, then normally we would expect gold to lose value in that environment.
Is it surprising to see this kind of reaction when Ben Bernanke's comments weren't quite that much different than previous statements?
Yes and no. The surprising part is that there hasn't been a dollar that's pulled out of the system yet. And I think it's surprising because nothing is really they haven't really taken anything out of the system. The money flow is still there. They're still buying bonds. That part is surprising to me, that we've traded down to 1175, yesterday. So I think markets are emotional. Markets price things in, and then they correct and overcorrect. And I think what you'll see is you've seen a little bit of a correction here today. It's a little bit overdone. The stochastics and the technicals look like it's overdone. There are a lot of shorts in the market. So you should probably see a little bit of a rally from here.
So it seems like there is a lot of psychological effects when it does come to the markets and,
right,
the Fed with their statements. Where do you think the next level of support is?
Well, I've been saying for a while the main area of support is 1157. We got very close last night. We got to 1170, I think 8 or something like that. So we're really not far from support. The fact that we're probably going to settle above 1200 today is a good sign. I think you've tested your first area of support. I think you're going to find support between 1176 and 1157. If it gets below that, I'm looking at 1050.